Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Monday.com. So what's attractive about Monday.com? We're going to talk about its revenue growth rates, we're going to talk about its path to profitability, and then we're going to bring this all together and talk about its valuation. So Monday.com is essentially something similar to Asana. It's a collaboration tool, and it's kind of like Asana meet Atlassian. So it allows the developer to customize the apps that are necessary to break down the silos in their IT software. So it's something that allows essentially for the workforce to collaborate and to follow the projects, to be able to really see who's doing what and when, and just it basically replaces kind of, let's say, spreadsheets and emails. It's a dashboard where everything is in one place and everyone can follow what's happening. It just allows for that connectivity as more and more of the workforce kind of gets spread out globally. So it's a compelling idea, and there is a lot to like here. One of the things that I wanted to highlight is that Monday.com is growing at a really rapid rate. So you can see here, so the last quarter Q2 that they reported, they were up 94% year over year, and they put out this guidance for the latter parts of the year. Predominantly I'm talking about here about Q4 21. It's growing at 54% year over year. Now this is a company that's been growing at very close to triple digits. Is it likely that by Q4 the growth rates will decelerate to the mid-50s? I don't think that's quite likely. I think that as we go through, you'll see that there is reasons to believe this is actually very, very conservative on management's part. But ultimately, this is the thing that we have to think about. How is Monday.com going to grow in 2022? Being able to have that visibility into its growth rate and whether or not Monday.com is able to grow at above, let's say, 50% year over year CAGR, that will have a dramatic impact on its valuation. So I'll just repeat that. So if the company can grow at more than 50% or 50% or slightly higher, this is a compelling investment right now. If on the other hand, it starts to fizzle out as it comes against Smartsheet and it comes against Asana and others in the space, then, investors have overpaid for this stock here, okay? So one of the things I want to highlight is, for me as an investor, I find it much more interesting to see the number of customers that are adopting a platform rather really than just focusing or just squarely on the guidance. And you can see here the number of customers on a 50K annual recurring revenue was up 226% year over year, okay? So the customers are really they're really adopting this at a rapid rate. So this is obviously something that I think is very, very attractive. Just to give you some reference numbers, if we look for on a like-for-like basis, Asana, which is the one stock that everyone is just salivating over, for the same 50K enterprise ARR, it was up 111% in Q2. So it kind of is like less than half of the adoption that they're seeing Asana, even though more investors are really salivating over Asana. So this is something to put out there. The other thing that I wanted to highlight is that Monday.com is making a very strong path to profitability. So in Q1 of 21, they were at negative 40%, okay? And then they moved into Q2 on the non-GAAP operating margin, it was at negative 14%. So there was a movement from the first part of from Q1 to Q2 towards operating positive movement on the non-GAAP operating margin. So for the year as a whole, they're kind of guiding at this moment in time for negative 32%. If you see here on the graph in blue, you can see that last year was negative 53%. So for him to go in 2019 at negative 91, then the following year negative 53, and this year to be at negative 32, it shows that they're really making a strong focus on improving its operating losses. Just for reference, you can see here that Asana, they don't offer you the guidance operating margins for the year, but if you just say, okay, for the first half of the year they did negative 43, and the kind of guidance for the next quarter looks for approximately negative 50%. So with that in mind, you're kind of looking at for this year at negative 45% operating margins loss. So in that context, the 32% for Monday.com is meaningfully better than negative 45 for Asana. So with that in mind, let's just continue here. So on the valuation perspective, Monday.com is priced at 40 times next year's sales. This is really, really rich, okay? If, on the other hand, you say, okay, analysts that are following the stock, they're expecting approximately mid-40s growth rate. So if Monday.com is able to grow faster than the mid-40s, obviously investors will be very, very welcoming of that, and the 40 times next year sales that investors are paying will seem a bargain in hindsight as well. Let's compare again with Asana. So Asana is priced at 44 times next year's sales. So Asana is even more expensive and is expected to grow next year at kind of roughly close to 30%. So Asana is growing at a slower rate, it's more unprofitable, the customers adopting its platform is slightly lower, and it's more expensive. So this doesn't necessarily mean that Monday.com is in the bargain basement and that you should be backing up the truck right here, but I just wanted to highlight that, you know, it's not as outrageous as it may seem on the front of it. So anyway, I mean, typically I would go for something that's a bit cheaper, so that's what I offer my marketplace. My marketplace is called Deep Value Returns, and I typically go for something that, I mean, I would like to go for something slightly more misunderstood. I'd like to go for something significantly cheaper. I do like to kind of get those very strong growth stocks, but I just, you know, I don't want to really pay up for it. That's why I'm kind of selective, and because I follow so many companies, I'm able to really pick and choose every so often something that truly stands out. So you're welcome to do a free trial, and you can unsubscribe anytime before the 14 days, and you're not going to get charged anything at all. Check the reviews from a marketplace. You can see what other people have said. That's always a good way to get started. And I'm not going to replace you as the investor. I'm just a place that either can provide some hand holding or one or two ideas that, you know, are worthwhile considering that you might not be thinking about in that way. So as always, I hope to see you next time, and yeah, see you.